Thank you. And I want to give some more context to our viewers about this, because this is the biggest drop and, in fact, the lowest level that we're seeing in claims since January 9th of this year, and also represents a drop of 59,000 claims, and that includes the revision that we saw from the week earlier. So a pretty significant decline. Let's get to Dean Maki, who's the chief U.S. economist at Barclays Capital. And Dean, these numbers, I think particularly, at least in my view from talking to economists like you, has fallen below the 600,000 level. A pretty big drop and pretty significant level, no?
That is a significant level. I'd caution against making too much out of this particular week, because it's a very difficult one for the seasonal factors to get right. Auto shutdowns are tricky this year because they're sequenced differently than in previous years, so there's going to be a lot of volatility over the next couple of weeks. Having said that, though, the trend in jobless claims is clearly downward, and we would expect that to show through as we keep moving through the third quarter. And that's one of the clearest signs out there that the recession is coming to an end.
And what does this tell you? Because there's always that inverse relationship. I mean, what does this tell you about the payrolls data, the monthly payrolls data, and where that's going?
Well, the payroll job losses are lessening. On any kind of a trend basis, job losses are slowing. We had a bit of a spike up last month, but in the second quarter, for example, we averaged 436,000 jobs lost. In the first quarter, that number was 690,000. So a big drop between Q1 and Q2 in the number of jobs lost. That's consistent with what we're seeing elsewhere in the labor market as well. Right,
and the jobless rate, though, I mean, I know we had worse than expected fall in the payrolls numbers, but the jobless rate appears to be slowing in terms of its ascent, which may mean, Dean, you tell me, that perhaps we may not hit that double-digit threshold.
It's going to be close. Our forecast is that we will get to 10%, but it's possible we might not quite get there. The risks are perhaps somewhat to the downside of that number right now. We'll have to see as the months go on. We do expect some further drift up, and until we start seeing job gains, that number will keep drifting higher.
Well, I guess that's the key then, Dean. I mean, when do you expect that these numbers will turn positive?
We think at some point in the fourth quarter is when it's reasonable to see job gains turn into positive territory. We think the economy starts to grow in the third quarter, but it takes a few months for that to translate into payroll gains.
And where would that hiring come from, Dean?
The hiring is going to come from the service sector. Service sector job losses are lessening significantly, and as we move forward, the service sector will naturally turn to job growth. The manufacturing sector also is the sector that's going to be rebounding in terms of activity most significantly in the second half of the year.
Okay, Dean, and also, just try to put all this in perspective for us, because it's not just jobs data, obviously, that we're looking at to indicate a recovery, but, we've gotten some mixed data, though. I mean, on the consumer confidence front and the durable goods front. Altogether, taking a look at the choppy data, I mean, what do you see in terms of your outlook for the economy later this year and also into 2010?
Yeah, what's happened is we've gone from uniformly poor data in the first quarter, for example, to very mixed data in the second quarter. That's a sign the economy was contracting less sharply. As we move through the second half of the year, we think the data turns more uniformly positive. We see growth in the second half of the year of 3% on average. So we do see a significant turn coming.
Right. So in other words, this is natural that we're seeing choppy data at this point.
That's right. When you're at a turning point, it gets choppy.
Okay. Dean, always great to talk with you. Thanks so much for joining us. Dean Maki of Barclays Capital talking about the jobs data.